In the next few moments, you're going to witness the agenda of the major 3 sessions in the Forex market. The institutions that have the capacity to move and change the direction of the price do so in order to make money. Currency in the foreign exchange market is liquidity. Liquidity is engineered by the algorithm of the market makers. These market makers are based in London, New York, and Asia. Let's proceed to the charts. On your screens right now, you are looking at Euro USD. We have several boxes. Each box means something. The big red box is a whole day. So we have 5 big red boxes. 1, 2, 3, 4, 5. Monday, Tuesday, Wednesday, Thursday, and Friday. Within each of those boxes, we have 3 smaller boxes. The first one is Asia, London, New York. Asia, London, New York. Asia, London, New York, and so forth. We have 24 hours in a day. This 24 hours can be divided into 3 time zones. 24 divided by 3 equals 8. This is an easy formula for you to understand what is happening in the Forex market. So the first 8 hours in the day is the Asia session, from around 10 p.m. till about 6 a.m. Okay, 10 to 6, that is Asia. 8 candles on a 1H time frame is the Asia session. Asia session is the time frame that usually has the least volume within the Forex market. Session number 2 is the London session, starting from around 6 till 2 p.m. GMT. 8 candles, 1, 2, 3, 4, 5, 6, 7, 8. And the last 8, it is the New York session, which starts around 2 p.m. till about 10 p.m. So there you have it. 24 candles divided by 3 equals 8. So there are definitely smaller sessions within these 3 big ones. We have Frankfurt, Tokyo, Sydney. However, the 3 major ones that encompass all the movements is London, New York, and Asia sessions. One thing which you need to understand about what happens during each session is that each session actually tries to grab liquidity from the previous sessions. I'm now going to illustrate it on this chart. So as we can see, here's the Asia session. Here's the high of the Asia session. And what does London Open does? Grab liquidity from this Asia high. That is a stop hunt. Now, we have London session over here. This is the London high. What does New York do? New York opens around 2 p.m. grabs liquidity from this London high. Once again, we have our Asia session high right here, followed by a move that starts around 6, 7, 8. Stop hunt of the Asia high liquidity, just like so. And the same thing happens vice versa. So right here we have, over here we have the London session low. What happens during New York around 2 p.m. grabs liquidity from not just the London session low, but also the Asia session low. Okay, that's that. Here we have a New York Open. The New York Open grabs liquidity from the previous day New York Open, just like so. Okay, and this process happens over and over again. The agenda of the banks within each session is to grab liquidity from the highs and the lows, because the highs and the lows is where the liquidity is placed within the Forex market. Now we are going to remove the box and just look at the chart through the paradigm of just the sessions in the Forex market. You can see that each day we have Asia, London, New York, Asia, London, New York, Asia, London, New York. The stop hunt, which is the most often within the Forex market, is the London session liquidity grab. So we have the Asia session, which has low volume typically, then stop hunt of the Asia low right here, and then the price within an impulsive move goes to the upside. Okay, we have another Asian session low right here. What happens during the London session? Liquidity grab of the Asia low, and then impulsive move to the upside. Happens day in and day out. And we have another Asia session high. What happens during the London session? We have a liquidity grab of the Asia high, and then an impulsive move to the downside. Okay, so each session grabs liquidity from the previous sessions. Now we are going to switch to the day indicator. The higher the time frame, the higher is the liquidity. So sometimes you will witness that the price does not just grab the liquidity on the previous session, but it actually grabs liquidity from the previous day. So each of these red boxes marks the highs and the lows of each day. The highs and the lows of each day have a vast amount of accumulated orders. When the price ranges, it accumulates a lot of orders. The more orders there are within a particular period of time, the more money the market makers are going to generate by grabbing liquidity from that section. So right here we have a high. We had a massive liquidity grab right here. As you can see, it was very impulsive, and then the price moved down. Okay, that's a daily liquidity grab. We have another daily high over here and daily highs over here. So this move grabbed the liquidity that was placed around here, and the price moved to the downside. These are the things that you need to understand in order to master trading Forex. It is about understanding that the algorithm does two things: engineer price and grab liquidity. This is the playbook of the market makers. If you want to understand how to trade and generate money in the Forex market, then click the link within the description box below. I am Toxability. I hope you enjoyed this video. Comment in the comment section below, like this video, share this video, and I'll see you guys in the next one. Take care.